Hello, 4-Year Journey members and followers. This is Bob Loukas. It is December the 4th here in New York. I hope you're all doing really well. This is yet another update to the journey. Going to cover today the more recent price action, what I think could be going on here in the sort of intermediate time frame, and of course, widen the lens out to the longer term view where all of you following the journey, all of you so-called hodlers should be mostly focused on. I'll also end the video with a little bit of an overview of my strategy for taking profit, or at least rotating out of Bitcoin into something else, and then possibly rotating back at the end of the 4-year cycle. That's been a pretty hot topic or question that many of you have had. So I want to cover the exit strategy for you as well. Before I begin, just a quick disclaimer, this is not financial advice. You should do your own research. I'm essentially just covering my own personal strategy, my own journey. And if that provides value to you, then that's great. I hope it does. But all I can do is just share with you what I'm personally doing, what I'm thinking, and how I'm approaching this market. In addition, there are a lot of scammers out there. People are emailing followers of this journey. I think they're getting emails from either LinkedIn or they're getting them from the YouTube comments. Just be aware, I'll never solicit you with any offer or any promotion or any sort of idea of joining a trading group. And I would never do that via email. Again, everything I do is either on YouTube here or it's on my own personal site, Bitcoin Live, or the Financial Tap, 2 different websites. So that said, let's get into the action here. I'm going to very quickly look at a daily chart. None of you should be focused on the daily chart. I just want to illustrate here that ever since we topped here in June at around about the just shy of the $14,000 range, we have been in a significant downtrend of more than 50% at this point. From a shorter term cycle perspective, what is very clear here is that we have a series of lower highs that are in motion, and for the most part, lower lows. That is a classic cycle downtrend. That's the definition of a downtrend. And for that reason, in the short term, the bias here is to the downside. Eventually, or at some point, I firmly and strongly believe that this downtrend will end, will come to its conclusion. I thought it was going to come to a conclusion here in October. I was not right on that. But again, from a long-term perspective, it's irrelevant. It's possible that this here in November becomes the low and the end of this downtrend. But the way the market has responded over the last couple of weeks leads me to believe that there is still a significant chance that we're still going to see lower action for the remainder of December and possibly into January before we could see an end to this downtrend. But flipping to a weekly chart, again, what we have here is a market that went way too fast, way too quickly, coming out of the 4-year cycle lows, adding a 300% rally, providing or creating too much separation between sort of the 10-week moving average. And in essence, it became a little mini parabola that obviously burst and topped and has since now seen the market correct in a very significant fashion. Unfortunately, this is just a symptom of where Bitcoin is in its evolution. The volatility levels that we see in something like Bitcoin go both ways. They cut both ways. And for a hodler, we can't enjoy 300% rallies without bracing ourselves and being prepared for 50% declines. You know, when you've got volatility of 70 and 80%, these types of moves are, in its nature, expected and default. So, you know, I always find it interesting when people look for reasons for Bitcoin being down 30 and 40% in any given time frame, or up 50 and 100%. You know, and they point to hacks and they point to distribution and all sorts of reasons for the market behaving a certain way. But the reality is that this is a highly speculative market It's driven by pure speculation. And for that reason, we're going to see, and we'll continue to see in the future, these massive moves to the upside and downside. So what's the point then? The point is that as a hodler and somebody looking at the investment from a 3 to 4 year time frame, these intermediate cycles that that rally by up to 100% and decline by 30 and 40% are really part of the journey. And until we embrace and accept the fact that we're going to get these massive swings at certain times, now these are probably as big as you're going to see, of course, but they are still well within a couple of standard deviations of expectation. So we need to be just accepting of this fact, and again focus on the longer term perspective and the longer term goal, which is a cycle that is in uptrend, a cycle that over the 4 years is more likely to rally and move in an uptrend fashion for 3 to 4 of those years, with the exception that we're going to see these massive counter trend moves or even corrections and bear markets within a larger 4-year cycle. And if we're not prepared for those types of moves, then essentially what happens is we move from that firm, hollow mindset, and we allow the more recent and intermediate price action to influence our decision making. So our decision making and our intentions are on the longer time frame and the longer goal, but we end up sort of panicking to a large extent on the more intermediate time frame, losing sight of really what the goal is about. And I've talked about many times about position sizing, and position sizing, some people think that in a longer investment thesis that position sizing doesn't matter, but that's not true. Position sizing is absolutely critical on all time frames and in all investment. So another reason why I keep in every single video emphasizing that your position needs to be structured where you can sleep at night and you're not allowing 30 and 40% declines in the market to significantly throw you off your overall thesis and your overall strategy. And that's what's happening to many of you right now. I know it is, because I know from the questions and the emails and the DMs I'm receiving that people are, not all of you, many of you are firm and strong, but many are capitulating and they're selling always at the wrong time. So if your time frame is 3 years out and you're allowing yourself to be influenced by action over a 2 or 3 month period, then you're essentially going against your thesis, you're going against your process, and you're allowing short-term price to dictate how you trade this. And again, so that's why my allocation overall is 5% on the HODL standpoint to my wealth. Getting in early obviously helps me. So, I would need to see Bitcoin well below the $4,000 range before my position even goes into the negative. But even so, that's something that I've, again, talked about that I'm prepared to experience. It has not been my expectation. I do not see price falling below sort of the $6,000 range. If it does, then I would be seriously concerned with where the 4-year cycle was heading. I would seriously begin to consider that this $14,000 high is the high for the 4-year cycle, and that we could be looking at a 3-year, I wouldn't call it, well, it's a bear market. It doesn't necessarily mean straight down, but a 3-year period where we kind of just churn and turn, maybe going down to the $3,000 level again, and then back up. Again, making it very clear, not my expectation, but in a sound investment strategy, all possibilities have to be factored and considered, especially, again, looking at a market that has such extreme volatility, that is so early in its development. We need to be mindful of that. And by going in leverage deep, by borrowing money to trade or to invest, or by putting in an allocation that you cannot handle the downside with, is only going to lead to a disaster, and could lead to a situation where, because you have a too big a position, that any sort of move down, let's just say 5,200 or 300 in December, or even in let's just call it January, for example, could lead you to experience a significant amount of stress and dump your position, thinking that it's all over, it's failed, and it's going back to 2 or 3,000. I already see a ton of $3,000 calls and charts now proliferating Twitter and all the social media channels. That's the nature of a bear market. It turns sentiment to one extreme from the other, and everybody becomes fearful. And that's typically around the time when a market, at least a market in a longer term uptrend, is ready to turn. So don't fall victim to the possibility of puking, selling, capitulating your positions in this type of situation before the next move and the next market higher, or the next sort of trend higher then begins. Now, when I first posted a video just 10 months, 11 months ago, I essentially outlined an idea or a thesis that price would stay below this sort of $5,000, $6,000 range for the majority to most of the year. I even said in my first video that it may not even be in 2019 that we see a break kind of above this 5,800 level, which was the level that provided some support before breaking down in December of last year. I kind of thought that we may take a while to get above that. Of course, I was wrong there. It came up very, very quickly. But my point is that around the $6,000 to $7,000 range by the end of this year was really the overall expectation, based on how Bitcoin has behaved in previous 4-year cycles and its typical structure in those markets. Just looking back here, kind of a similar thing where you have a year of accumulation or consolidation to begin with, and accumulation before breaking out and beginning the next big bull trend higher. And I think that's just what's going on here. Again, we just went too high too fast, and now we have to come back and revert back to sort of the mean line before we can begin to experience that next uptrend higher. So overall, from a structural standpoint, I'm not concerned. My original thinking and thesis for getting in here at a 4-year cycle low still holds perfectly true, in my opinion. And with my type of allocation, I feel absolutely no reason to be panicked or concerned at this point, being up still, over, nearly 80, 90% from sort of the $4,000 level, and with Bitcoin still up 120% for the year to date. Bitcoin still is one of those funny asset classes where we have a lot of inexperienced traders and investors in this space, people complaining about a market that's up 130% year to date, and all they can see is doom and gloom, and the bearish scenario. With price at 7,400 just 6 months ago, when price was going through that 7,400 area, everybody was excited. People were talking about 20,000 by the end of the year, and then so on, and 30,000. How quickly that narrative changes, right? So realize that it's more about sentiment, it's more about how we view the market than it is anything else. We're allowing the idea of riches to influence our trading, as opposed to focusing on the process and allowing price over time to take care of itself. If you can concentrate on your process, concentrate on the goal that we have, and allow the market to get up to this point, up into the six-figure range within the next 2 or 3 years, you need to be laser focused on how you view the market, your emotions and your psychology, and stick to your plan to be able to realize that goal. Now, there are no guarantees, zero guarantees in any trading. Whether this long-term thesis plays out or not, I don't have the answer to that. All I know is what I've seen in prior cycles, and my belief in Bitcoin overall as a revolutionary technology and a solution for a digital age money. I believe in that firmly, and that's why I stay invested. And I do not, with what I know today, I do not want to see a situation where price is up at that six-figure range in the next 2 years, and I don't have, and I didn't execute on my plan. That would be the biggest sin, in my opinion. I can handle the market going in a 3-year bear market because I'm positioned to be able to support something like that where it's not going to hurt me, but I will not allow a thesis that I believe in to unfold and for me to not participate in the outcome of something like that. So this is all about process. It's not about price action necessarily at this point. It's just about sticking to your overall goal and your overall plan and seeing it through. Okay, let's go on to exit strategy here. So exit strategy for me, what that looks like is obviously I want to have a decent position in the event that Bitcoin gets above the $100,000 range by the, say, late 2020 or into the 2021 period. That's my overall objective. That's my thesis here. So I want to be positioned to be able to take advantage of that outcome. It doesn't mean, though, that I'll just let everything ride all the way up. As the market goes higher and gets into or above the $20,000 range and beyond, I want to look for some opportunity to begin to take some off the table, knowing that I'm possibly giving up some future gains if indeed it gets up to that $120,000, $150,000 to $200,000 range that I'm hoping for. And I'm doing that purposefully because I want to be able to hold firmly and strongly on a position without feeling the need to sell or panic on a 20 or 30% correction that will inevitably come throughout that process going up to that sort of big six-figure dollar range. When you're holding, it's the same in reverse. You're experiencing pain here potentially as the market corrects by 50%. As the market goes up and your position doubles and triples and quadruples and then eventually goes into sort of a 10x situation, the gains become something that begins to overwhelm you. And it's a difficult thing to express if you haven't gone through it in the past. But it's almost harder to hold big gaining positions, holding those profits higher as it is holding on to a loser. Most people can hold on to losers longer than they can hold on to winners. And I want to be able to take profit on the way up to allow me to ride the 20 and 30 and maybe even 40% corrections that we'll see as we go up. If you recall the prior bull market, we had 30% corrections often along the way. And I know many who were in that space at that time couldn't handle these corrections, thinking that they held on, they had so much paper profit in their portfolio that when they saw a 30% correction, they were concerned that was the major top for the move, and they sold out at those drops, only to see the market reverse. And then what they ended up doing is, because they reduced their allocation significantly and then realized that it was not the end of the move, they bought back significantly higher. And then what that ended up doing was dramatically increasing their average cost of Bitcoin, which essentially took away future profits. So I want to avoid doing that by taking profits at certain points. Now, not an extreme amount, but enough where I feel as if I can get my initial capital back, and then as the market goes higher, taking some profit away and reallocating. Because again, 5% of wealth here, if Bitcoin doubles and then goes into a 5x and a 10x situation. So for example, at 40,000, we're looking at a 10x. A 10x now from initial allocation, it's now a significantly larger percentage of my overall wealth. And that becomes, again, difficult to manage for that reason. So I want to begin to trim and take profits, but not on a 20 or 30% decline. I want to start taking those at the peaks. So I want to start taking those at spikes in the market as it goes higher. Now, from a predetermined level, initially when I started out here earlier in the year, I had a price target of 18,000 for the first sell. That has now moved up to 28,000. And the reason for that is, as we moved up significantly to this $14,000 range and pulled back, if we now go back above this $14,000 range and continue higher, then I'm fairly confident that the long-term narrative going up to a six-figure range is right and is real. I don't see a situation where we go back above sort of 14,000, but then fail to break above 20, just based on where this is at. So this is either a major top in play and we're going to have a 2 or 3 year bear market and we'll have to deal with that, or we're going and we're going to continue on as I expect. So I want to move up that level to the $28,000 range, knowing that that's well short of my goal, but it's taking some off the table. Right, and at $28,000, taking say 5 Bitcoin off the table from the 30 that I have allocated to this will make me feel confident in holding the rest of the position as it goes higher. From then on, though, it's not going to be as arbitrary as a certain price target. I'll probably just be looking at the market and getting a sense for how I feel, where it is in timing from a 4-year standpoint, how much longer do I think this market has. But I probably would then look towards a $56,000 range, or in that range at least, for possibly the second sell and taking some more off the table at that point. Because 56,000 or 55,000 at some level there, it represents roughly a 1 trillion market capitalization for Bitcoin. And I think that's going to be a significant number. And at that point, it's also possible that we could be looking at a cycle that just doesn't do anywhere near the type of gains that the prior cycles did, but a $50,000 level is still a significant amount of money to take off a table here. But knowing that, for whatever reason, we just don't get a 6-figure peak in this 4-year cycle. So again, I'm protecting myself from a situation where the market peaks much earlier than I think, and then begins a real bear market quickly, leaving me in a position where I can't sell, worried that I'm selling on a drop or a 30% capitulation, but the market keeps going lower. So I don't want to be in a paper profit situation where I'm up 10x on my position and then watch it just fade and fade and fade month after month. By taking some profit at certain predetermined levels, I'm banking and I'm reallocating my wealth into other endeavors, and I feel confident and comfortable in my position at that point. Okay, but from that point on, I would say the second sell, let's just call it the $56,000 range. At that point, I'll probably then go into more of a technical stamp of view on when to exit the market. So looking for other. And we'll cover that in the future, and that's going to be a long way away from today. But looking more at rate of change in price, standard deviation type moves, or where it is on a weekly level in relation to its Bollinger Band, which is a standard deviation. Looking at it from an extension to say a 10-week moving average, a couple of different sort of metrics like that, and of course taking stock of sentiment at the time and the day, and getting an overall feel for who's talking about Bitcoin, who's buying Bitcoin at that point, and that's going to give me a better indication of whether or not a top is in place. Now, timing the absolute top is probably going to be very difficult to do. I think I did a very good job in the prior cycle with a large position near the $20,000 range, but there are no guarantees. It's very difficult to time absolute tops. I'm not necessarily looking to time the top in the next move, because we're in early as far as I'm concerned. If the market goes up into the 50 and then the 100,000 and above area, essentially getting out of the market at some point with the majority of your Bitcoin at those higher levels is success. And that's how I define my goal. And that's what success looks like to me, and that's what I'm focused on. I'm not going to look back and say, well, look, you lost 20,000 a coin. If you held on, that's not a good game to play. Looking back in hindsight in the revision mirror, for me, I like to have a plan in place and then focus day to day, week to week, month to month on executing on that plan. And that's what I think ends up allowing me to become successful in executing on this idea. So that's going to come to a wrap for this week. I think this was a little bit shorter and sweeter, perhaps, right to the point. I think I just want to let you know that, again, my confidence level is still the same. My objectives are still the same. I'm in this for the same reasons. Nothing really has changed as far as I'm concerned. I'm as bullish as I've ever been. I think I just want to keep reminding you of why you're in this, and try and frame your expectations and your goals, and more importantly, check your emotions. Psychology is such an underrated aspect to investing. Keep your allocation and your position size reasonable. Don't look for absolute riches, because absolute riches rarely come to those that only focus on that. Again, thanks for following. If you like this, please give it a like. Please give it a share if you could. I would appreciate that. If you have any comments, happy to try and reply to them. Again, thank you for following, and I'll have another video out soon, hopefully before the holidays. Wishing you all the very best. Thank you.